Well, welcome to this landscape special edition of the Status Chat for Friday, 4/3 of 26. Now, we're just going to get right to it. I don't think we got a whole lot to work with today. It's a good news weekend, and I thought we might try to hit some good news. I have to do the numbers manually. All right, so let's go to our center panel. This is today, trading economics, 7:30. Let's look at non-farm payroll, see if we can find some good news there. Well, it does look like we pull that up. We had a little bit of a scare last week, but between last week's at negative 133 and this, last month, I should say, 133 minus, we're 178, so we're still gaining. Even if we take these months, it isn't as significant as we were from December to here we are. This be December, January, February. January was big, which is not unusual, to be quite honest, because we do have seasonal layoffs that offset some, but a lot of companies are petering out of their money and resources toward the end of the fourth quarter, and they're waiting for their new hires starting in January, new tax year, all that kind of good rot. So that's not a big deal there. I want to go back now and look at, let's back up. We can go one more. We can now look at the unemployment rate. We would like to see that technically going down, and here we are. It has, in fact, gone down in March from February from 4.4, 4.3. Not a lot. I'll grant you that. It's not a lot, but it is down versus even in November it was higher than that. And then we could go back, say, 3 years, and we have been coming down since November of 2025. So we have some people want to scare us with our fuel prices. Yeah, and that's a real thing. We had PCE or CPI, one of them come out earlier this week. Hourly earnings per participation rate. This should be fun. Participation rate is diminishing. So when we see the participation rate go down and our actual outputs go up, that's a good thing, I think, because fewer people there are working, willing to work. The higher wages they got to pay for the ones who do work. It's a little backward logic, but it does work that way. Let's go back up to, I think we saw some interesting stuff come Monday. I remember having done this. Dallas Fed Manufacturing Index, right? That essentially is right there on the zero mark. It is negative, but it's right there on the flat where we've been for a while. That's not good. That's not bad. Let's see, where were we at the 6-month bill auction? Up. We're coming back up. I wish this thing would not adjust the way it does, but it gives us what we're looking for. We're coming up a little bit, not overly significant. And the other one I think was doing the same thing the last I looked at it. 3-month. Yeah, pretty well much flat, and had it been flat since when? Slide this down. Since about last year. So there's not a lot going on with the bills. That's kind of going. We had a Case-Shiller. I looked at this. I think this is good news. Look how we're flattening down. This is the composite home price index. And 26 is less, 1.2, much less growth than 1.4, 1.4, 1.3, 1.4, 1.6. And see, really, we're starting to get back towards the old regime when we start getting at the 4.5. Now, a lot of people will look at it and go like, yeah, but I want my price to go up. Great if you're looking to sell. If you're not looking to sell, then the price going up only increases your taxes. Might increase your net worth, but you'd still have to kind of like do a conversion to get rid of it. So in between the time when you're not looking to put your house on the market, I don't normally get all that, bent out of shape over stuff like this. But if you're looking potentially as a buyer, that doesn't look like it's going to be too terribly bad right there, does it? At 1.2%. Let's see what else do I have picked out here. The month over month, we can look at it real quick. It's actually coming down. I kind of would like to see this a little bit. This is January. We don't really have the first quarter. I don't know why we don't have the first quarter available for us. Let's see what the forecast says. No, not updated number, which we had that. Chicago PMI. I would expect this to be up, but it's not. It's actually down 52.8 points, a little bit off of the 57.7. So our oil, we do have it in this somewhere. Where are we at? Mortgage rates. Look at the mortgage rates real quick. 30-year mortgage rate, Mortgage Bankers Association. Yep, it's going up. Looks really dramatic here, doesn't it? But where were we at this point? 6.19 or 6.2 to 6.6. That's 0.4 of a point. It looks very dramatic right here because we've got it chopped off at the 6 level, probably at the bottom. But that's not bad. Look where we were at the start of 2025. 7.09. It's been here. It's been coming straight down. Overall, straight down. We had a few bounces, but straight down since we've had a change of command. Here we are, our oils. Let's look at this. EIA crude oil stocks, gasoline stocks, crude oil imports change, crushing oil stock. I think, I'm not an oil man, but I think this may be that some of that shale stuff, distillate products. Let's look at crude oil stock change. And they do say that they're up. Let's see what the date is on that. March, end of last month, 2026. 5.4 billion. Down a little bit from the 6.9 billion. But that, hey, that's way better than down here where we were minus 9 billion. And when was this? 2026, February? We got through that without any heavy, emotions or whatever. I know we've got some uncertain period, but we're coming up on a good weekend. This is Easter weekend, and that should be a good weekend for most of us. I will read our numbers, and then we'll just get out of here. Okay, week ending on the 20th of March, we had 27,474 that increased in the availables. 48,92 was the under contracts, still showing, still available. That also went up for a ratio of 18%. They bumped up. Here we are, 4/3 of 26. Easter Friday, Good Friday, I guess we would call that. 27,745. That did go up. 49,56. That also went up, but the ratio between them remained the same. So we're increasing a little bit as the season starts to get going. Hope you've enjoyed having your first couple mows of the grasses this year, and we'll see you next week.